Welcome to this very special edition of the KJ Masterclass Live, the show which ensures that you profit from your time spent here with experts, either through their industry insights, information, or simply learning from them. And today we have with us Fadi Habib. He is the founder of Legacy Wealth Builder Academy. He's a coach, entrepreneur, professor, real estate investor, and we'll be learning about options investing with him. We learn about growth system, about his financial strategies, and how to manage risk with confidence. Welcome to the show, Fadi.
Hi, AJ. How are you? Happy to be here.
You're welcome. Welcome to the show, Fadi. Welcome to India in this online form. And I'm sure not just in India, but a lot of people across the globe will benefit from what we are going to talk right now. As we said, we'll talk about how one can build wealth with options investing. We'll talk about all this. But before that, let's understand a bit about your journey so that the audience knows who they are listening to.
Okay, very quickly, I all my life I was a good student. I was a good person doing what I did what I'm supposed to do, basically going to school, having good grades. When I graduated, I had a good job with a good paying salary, but I was always tight on money. And when I was young, I read this book called Cash Flow Quadrant, and it taught me that there are four ways to make money. All our education system tells us to be an employee, and that's a very good way to start. But there are three more ways to make money, and just being an employee usually guarantees that you will never be wealthy. You'll never have abundance. It's a good way to pay your bills, maybe save a little bit of money, but if you want to have a little bit of abundance and wealth, you have to go and be either self-employed, business owner, and investor. So I used to go to work 9 to 5 and did my best to be a good employee. And after 5 p.m., I used to teach myself how to invest. I started with real estate investing, and I did very well. And I thought at that time that if somebody invests in the stock market, then they're really a gambler. That's not a responsible way to make money. And I was wrong, basically. So 12, 15 years ago, I started doing stocks and options, and I learned the right way to do it. And the problem in here is that a lot of people look at the stock market and treat it as if it's a big casino. They don't do any due diligence in terms of picking the stocks. They don't understand what they're buying, and they're really buying it as if it's a lottery ticket. And that's why a lot of people lose money. Anyway, fast forward, I developed this, started coaching people, developed this system to invest responsibly. It's not a casino. It's not a get-rich-quick scheme. And here we are. I'm coaching people and helping them get out of the rat race.
Absolutely. So let's talk about options investing itself. Means a lot of people, or rather, let me ask you, who is this options investing for? Because then there are huge lot of other options. Why should they even look at options investing if they are not a very hardcore person who understands about stock market and everything?
Okay, so the starting point is if you want to build wealth. So that's the starting point, and you understand that you cannot do it just by the employee going to your job. Second is you need to understand that there's a lot of myth around, everybody needs to understand that there's a lot of myth around the stock market. So they need to understand how the stock market behaves. It's not a casino. You're buying businesses. And the only way to evaluate a business is only one thing. The main thing is that it has to be making money. The business cannot be investable if it's losing money. Even if the products are very nice and sexy and beautiful, but if they are not able to generate profit, it's not a good business. You cannot invest in it. The people, like if you tell them, go buy an investment property, they will ask a lot of questions like, what is the rent? What are the expenses? Is the property cash flowing? What is the cap rate? Is it a good location? Any prudent investor will ask all these questions. However, the same investor, when it goes to the stock market, they don't do any of that. They just buy a stock because their friend told them so, which is a really, really horrible way of doing things. That's not really investing. It's gambling. So options is something that is tied to the stocks, and options comes from the word option. You will have the option of buying or selling the stock at a later date. So let me tell you, just to explain what is options very quickly. All of us sometimes buy insurance. So I have car insurance. The insurance company made a lot of money from me in the last 30 years because I do a lot of accidents. I don't. So I've been paying premium to the insurance company for a long, long time. And basically for the option, if I was in an accident, that they will basically pay for the damage or basically buy the car from me at a certain point of time. So the person who buys the insurance will have the right to exercise the option. The person who sells the insurance or sells the option will have the obligation at a certain point to pay money if needed. It's the same thing with options. So the example that I'm going to explain is called selling options. In this example, I will be the insurance company. If somebody, let's say, AJ, you have a stock called XYZ and you bought it at $200 and you're so afraid that it will go down below 190. So you can buy insurance, you can buy an option, you can have an agreement with me that says, Fadi, I know, you can come and tell me, Fadi, I know that you like to buy XYZ. I know that you are okay to buy it at 200, but let's have this agreement that if it goes down to 190, you will buy it from me at 190. From my point of view, I know XYZ is a good stock. It's a company that's making money, and I know has a very good competitive advantage. I'm happy to buy it at 200. When you come and tell me, can you please buy it from me at 190 if it goes down? I'm happier because now I get it at a discount. And if I go with you into this contract, you will actually pay me premium. It's the same as the premium of the insurance. So you're going to give me $5. So in effect, I didn't really buy it at 190. I bought it at 185. And this $5 is income generation. So options have this capability of giving you income generation. So that's a very, very quick way of doing options. But bottom line is options is also very risky if you don't know what you're doing. So it's not something you can dabble with without proper education. Same as stocks. Like you don't treat it as a casino, treat it as an investment. So you need to, if somebody wants to buy a refrigerator, they spend a lot of time comparing and looking at the brands and looking at the specifications. They don't do any of that when they buy stocks. You need to invest your time to figure out what is the right stock.
Right, Paddy. So that's where I come to. Who is this, options investing for? For a general person, for a professional who is working 9 to 5, obviously it needs a lot of, thing to understand about, the stock market itself. And options are a bit more advanced. A lot of people will take their own time to understand it, and not everyone will understand the details about it. So that is where I wanted to understand that, isn't stock market a better way rather than getting into something called options investing, much more advanced sort of a thing? Or just, yeah.
Got your question. So we can take it. It's basically step by step. I actually started options. I didn't start stocks. I started options, but you need to learn a little bit about stocks before you start options. There are different ways to invest. There's the long-term investment, like Warren Buffett way, and even within that, there's different categories. The SPY, which is an ETF for the S&P index. It's as if it's a bucket that has 500 big companies. We call that the market. So the average of the market, it goes 11% every year, compounded for the last 50 or 100 years. So the average of the market is 11%. So if you don't want to choose any stocks, you can just buy the SPY and wait, do nothing. And this will give you about 11%. If you are educated a little bit and understand how to pick stocks, you can get a little bit more than 11%. With options, I teach the way I'm teaching it. You can expect, that's not a promise, you can expect, or the average of the people around me is about 24% per year. That's double the market. There's a long-term investment and there's a trading way of looking things. I'm not a trader. I don't like speculation. I like looking at the market long-term because the market goes up on the long-term almost guaranteed. Long-term means 5 years plus. Short-term in the stock market is 2 years. In the short-term, any good company, even if it's a good company, the price can go down. The example that I always say is Meta, Facebook. It's a really good company. At some point of time in the last 2 years, it was at $400. it went down to $80. So there's a lot of volatility when there's COVID and there's some stuff that has nothing to do with the stock. The stock will go down. It's still a good company, but the stock will go down because really, as Peter Lynch tells us, there is absolutely no correlation in the short term between the price of the stock and the value of the company. And then right now it's went up to $700. So what I'm saying is, if you know that you have a good stock and it goes down, the normal behavior of a person that is not educated, they buy at the highest point and they sell at the lowest point. They get panicky when the stock goes down to 80, they get panic and they are afraid and they sell, guaranteeing them a loss. The people who know what they're doing, they have a belief in the stock. They don't buy any stock, they buy good stocks. And when it goes down, they go and buy more because it's a good stock. And they know that in the long term, as Peter Lynch told us, there's 100% correlation between the price of the stock and the value of the stock long term, 5 years plus. So I don't care about what's happening day by day. Like that's the trader mentality and adrenaline rush. Forget about that. That's not a good way to make money. My way of doing things as well is that I only want to spend 10 minutes a day to look at my portfolio. I don't have time to spend all day long. It's designed for professionals. I don't have all day long to look at a screen or follow the prices. No, I want it to be very simple, looking at long term, making really, really good ROI, like double the market, in a way that is simple. But yes, as a starting point, stocks is more simpler than options. And also one of the things I teach is that you cannot start with your real money. You have to start in an account called paper account. Paper account is an account whereby they give you $1 million. Like again, in IBKR, everybody can open IBKR. They give you $1 million. It's monopoly money. So if you make money, it's not your money. If you lose money, you didn't lose money. So you have to start and check anything. Let's say if you went to my mentorship program and you learned what I'm teaching, you can't just take what I taught you and just go put your money in it. You have to start with a paper account, prove to yourself that you can make money in a paper account. And if you don't make money in a paper account, you have no business putting your own money in doing this. So you have to check that you understood it. You have to check that the method makes you money. You have to check that you're not making any mistakes. That's where you make mistakes in paper money. So you have to be responsible. You have to be prudent. You have to be very pessimistic. Anybody talks about money, you should not be trusting anything they say, including me. You have to check for yourself, learn, try it with paper money, understand how people lose money, because the game, AJ, is not how to make money. The game in the stock market is how to not lose money. That's the first rule of Warren Buffett: don't lose money. So you have to understand what did people lose money, what are the mistakes they did, so that you can educate yourself. This is, like, for me, 3 times more important than the strategy itself.
Absolutely. So is that the best way to get started? Start with monopoly money and then get into, or is there a much more concrete way that one can get started with options investing?
So for me, that is the only responsible way. You cannot just start by risking your own money. And the risk here is not because the stock market is risky. The risk here is that you don't know what you're doing. If you're a beginner, you have to start with paper money so that you can test your strategy. It's like most people who go into the stock market, they don't have a strategy. They're just buying something and hoping it's going to go up tomorrow. Well, that's not a strategy at all. That's gambling. So if you want to take this in a responsible way, you have to learn, understand what is a good stock, start with paper money so that you can test for yourself. Your knowledge is a way to make money. And for me, that's the only way, the only responsible way. You want to go gambling, you will lose money, even if you made money in the beginning. So that, for me, that's yes, that's the right way. That's the only way, the right way. Yeah.
Right. And who is this options investing not for? Who is it not for?
The options investing is not for somebody who wants to make money quickly. Okay. If somebody thinks it's a get-rich-quick scheme. Options also have many, many ways to do it. There are ways that are very risk mitigated, and there are ways that are, like for me, pure gambling. And you always have to understand that with high ROI, if you're looking at something that is really, really high ROI, it means it has very, very high risk. You cannot disassociate both together. So if somebody's telling you, look, you're going to win $5 million in this lottery ticket, okay, good. Yes, if you win, you will get $5 million, but look at the risk. The risk is, for most people, 99.999%. If you buy the lottery ticket, you're going to lose the whatever, the $1 or $5, whatever. So it's huge risk. So you cannot disassociate risk from ROI. If you don't understand or you don't want to look at the risk, it's not for you. If you don't know what you're doing, if you don't get educated, it's not for you. If you think it's a get-rich-quick scheme, it's not for you. If you treat the stock market as a casino, it's not for you. It's a very methodical way. It's a very scientific way of looking at things. And if you don't know how to control your psychology, like if you're like everybody else, you wait till the stock goes up, 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 and then you buy. And then when it goes down, you have no conviction that this is a good stock. You get panicky and you sell. You're going to lose money. So you have to be willing to, like, it's the same. If you have a house and you know it's worth $100,000, if somebody came tomorrow and said, AJ, I want to buy it from you at $10,000, you're not going to panic and sell it to him at 10,000. Like, you're just going to go away. It's a quote. The price of the stock is just a quote. If you know that tomatoes are $10 a kilo and you go to the market and you find it at $5, you're not going to get panicky. Like, you're not going to go get the tomato in your house and sell it at $5. You're going to go and buy at $5 because you know the right price is 10. So it needs a little bit of willingness to go against the masses, because the masses in the stock market do not understand anything. And the prices of the stock market in the short term, it's like somebody who's drunk. A company is making money. Why would it go down because of COVID, or because there's a war in Ukraine, or because there's the Gaza war, or there's a pandemic somewhere? It has nothing. Like, Meta was selling very good. The profit is really good. But you need to understand that because the market is driven by sentiment, just people fear. Like, there's something called fear and greed index. You can Google it on CNN. It will tell you what is the sentiment of the market. It has nothing to do with how the company is performing. The company can be doing very good, and because the people are fearful, the price goes down. It makes this an opportunity for people like us who know what they're doing to go and buy and capitalize on the fear of everybody, right? Like, it's illogical fear. The fact that there's COVID, it had nothing to do with the sales of Apple, has nothing to do with the sales of Meta, though both of them went down. So it's an opportunity for us, instead of the normal masses whereby they get panicky and they sell at a loss.
Absolutely. So what is the biggest qualification to get into options investing? Should I know a lot about these things, or should I, the biggest qualification is, again, that winning with paper money. How would you like to suggest on that?
Okay, so first thing, you don't put your money, your real money, you have to start with paper money. But before that, so that you can even win in paper money, you have to educate yourself. There's a lot of information on YouTube, and there's a lot of courses as well. Be wary of courses that tells you you're going to make $100,000 in a month, you can double your money in 2 days. There's a lot of people out there who are praying, like, basically anything that looks like get rich quick, be wary. Okay, so it starts with education, AJ. The information is free. On YouTube, you can teach yourself anything you want for free. The way I advocate is that you learn a little bit for free. There's a lot of people like me. I offer a 12-week mentorship with a course that will take people not only to educate them, but also to, like what I do with people every month, every week, is that everybody in the group, it's a small group, they share their cell phone and they share the trades they did in paper money, so that we can get educated and figure out what is the right things. And I ask them questions about, what did you do? What should you close this transaction? Should you go out? So it's basically education. And same as riding a horse, you will have to allow yourself to try riding a horse without you getting killed by, like, falling from the horse. And that's the paper money arena, right? You want to train riding the horse. So first thing, you get educated about the horse, and so you go to YouTube and learn. Sometimes it's very hard to learn how to ride a horse by doing a YouTube, because it's just theory. So try to go into groups or mentorship programs and stuff like that, so that you can get a little bit of hands-on feedback from the coach. And then you try this stuff in paper money. It's very slow, not slow, but it's very methodical process. Makes sense, right? You're at any point of time, if you think you're gambling with your money, then you're doing something wrong. You should not be gambling. You should know exactly what you're doing. Try the method in paper money. And then when you make money in in paper money. And when you stop making mistakes and when you're confident, then and only then you can think of putting your money into the stock market and options.
Absolutely. And one last thing I want to understand is expectations from options investing. How do you set your expectations? Because once you think about money, once you think about the stock market, then you think about $1 million. How should
Yeah.
one, rein your
I
expectations?
love this question. So my system is called the growth system, and the first letter is G, which is goal setting. If you have a goal of, let's say, for example, think of two cities in India, whereby there's like 1,000 kilometers between them, or six, and if you drive, you will reach there in 12 hours. If your goal is to reach there in 3 hours, your goal will make you do things that are abnormal. It will make you drive the car at 300 kilometers per hour. And if you do that, this is very risky, because sooner or later, even if you drove for 2 hours at 300 kilometers per hour, you will sooner or later you will be in an accident, right? So goal setting is very important. Understand that the market average is about 11%. So if we're going to do something with the market, what we want is to get something more than 11%. Otherwise, why would we do that? We should just buy the SPY and let it go at 11%. So the way I tell people is that you should expect, or your goal should be 24% on average. Again, that's not every day or every, it's just on average per year. And can you do more? Yes. But always understand that if you take risk here, as long as you're okay with the risk, understand the risk, and you're okay with the risk. So can you do 36? Yes, you can. But I'm telling everybody to be humble and calm. Expect 24%. That's a good thing. And everybody else is telling you that you're going to double your money, you're going to make $1 million in 2 days. Just ignore it, because and if somebody tell you, let's do day trading, I made $100,000 last week, ask them how many accounts they blew up, how much money they lost, right? So if you're looking at a consistent way, on average, options is a good way, but you need to know what you're doing. You need to educate yourself. You need to be responsible. It's not gambling. Don't approach it as gambling. Some people can't help it, AJ. They just like the adrenaline rush of like not knowing if the money will be there tomorrow or not. Just that's not investing. That's not investing.
Absolutely. There's so much to learn about these things from you, Fadi, and I'm sure a lot of people would want to understand these things from you, learn about how to do things the right way. And so for that, what is the best way for them to connect with you?
So my website is called, I'm a founder of a company called Legacy Wealth Builder Academy. So you can go to legacywealthbuilderacademy.com or email me at info@legacywealthbuilderacademy, or you can find me on LinkedIn at Fadi Habib, FADI HABIB.
Wonderful. With this, it's a wrap on this very special edition of the KJ Masterclass Live. Thank you so much indeed for joining us.
Thank you, AJ. It was a pleasure.